Hi, welcome to the Market Alert for Monday, 25th of February 2019. So on Friday, we see prices breaking below the 200 bar moving average. However, prices come back and close above, and we see prices moving back towards Friday's high here on the overnight as well. So looking at the intraday, you can see the 200 bar moving average and DP level again. There's that pattern again, and prices move lower. They test highest volume that we see for a few hours. You see this here, and then the market reverses and moves to the upside, and then has traded sideways. Prices gapped higher. This is because of the Dow, which we'll talk about in just a moment. However, they've not really run off at all. They're currently in an uptrend and making a bit of progress and sitting around Friday's high there, which you can see at 130. News today, what have we got? Barmy Carney's out today at 10 a.m. and also Clarida speaks at 4 p.m. but that's a minor news item there, medium impact, so I wouldn't worry too much about that one. And then in the Dow, this also higher. You can see prices starting to move higher, trading up to the 26,069. And the reason for this is the China trade deal that was going to come into force, or the tariffs are not going to. And there's a brilliant article here of why you can expect to see prices move higher. This is what I've been going on about for years and continue to do so. This does come with a cautionary tale as well, which I also agree with. But there are three things that are driving this market, that's for sure. And one obviously is the China deal. The second thing is the Federal Reserve turning dovish as opposed to wanting to normalise the balance sheet. And then the buybacks by the corporations that are listed on the Dow. This is a really good article. It's well worth a read. So I'll put a link to this so that you can go through that in detail. But really good article. But as I say, I agree. This is where we're heading, back to these all-time highs. No doubts about it, because as I keep saying, and this article reiterates it, that if the stock market is buoyant, then the people will keep spending. In fact, there's another brilliant video that's just come out by the Money GPS showing that the amount of money that's being remortgaged in properties in the US is at record highs. That's always a good indication that we're just around the corner from a recession as well. Also, the global macroeconomics is also showing that things are slowing as well. But as long as they can keep pumping the market to the upside, that's all that matters, because the general population will think, oh well, everything's fine if the stock market's crashing. Different ball game. So on Friday we get the retracement here before prices move higher. You can see the volume there. We had a short. The short failed because we came back, did a double bottom, but also, as you will see here, just take the extend right out there. From here to here, you'll see the market trading down to the 76% retracement and then closing back above it, and away we go. Then it becomes a support. You see the buying here, and then off we go, and we get the retracements until the market moves lower on the overnight, right down, not on the overnight, before the end of the session, right down to the 200 bar moving average. And the 200 bar moving average is used by the technical analyst traders throughout the whole of the fund managers and institutions on Wall Street, and that's why it's important to have it on the chart. You can see how they use this to buy back the market at this level. As long as they can keep it above this, again, it's a psychological thing, just as it is having the stock market on the highs for the masses to keep go out and borrowing. Same thing with the 200 bar moving average. It becomes a self-fulfilling prophecy as prices hit these levels. And finally, in Bitcoin, big sell-off yesterday. You can see this, the market moving sharply lower. The range for yesterday's activity is, let's have a look. Just help if you actually activate the tool, Keith. So from the high down to the low, $500 drop yesterday, or range on the Sunday when most people were away from the computers, and you can see that very clearly in the 4-hour chart there, and in the 15-minute chart even more amplified there. Just came out of the blue, and the market moving lower there, so some volatility back for this, but again it just evaporates. It stays volatile for a while, and then eventually it just goes back to this. It's very frustrating, but that's what it's doing at the moment, and that's what we've got to play with until the activity picks up. Okay, that will do it for this one. If there is anything to add, I will do so later. Otherwise, as ever, thanks for watching. See you in the next one.